ladies and gentlemen. Permit me to start by congratulating the PayDebt team for a fantastic conference. It's our first time attending ADU, and we've been very impressed by how the event has been put together. I'll be speaking today about the African Export-Import Bank, the organization I'm privileged to work for, which is a multilateral development finance institution established a little over 30 years ago. The bank is headquartered in Cairo with a number of regional offices across the African continent. Afreximbank was established in response to a number of factors, primarily a lack of sufficient financing for African trade. The institution was tasked with bolstering the infrastructure necessary to spur economic growth and also increase trade flows within Africa and also beyond the borders of the continent. Afreximbank is privileged to count 54 African countries as member states, which enables the bank to conduct business pretty much across the entire African continent. Africa, I'm sure you'd agree with me, needs strong financial institutions to champion its cause. And over the years since its establishment, Afreximbank has steadily worked on building its financial profile to ensure it has the required firepower to deliver on its mandate. The bank has achieved significant growth over the last few years with a total asset portfolio of $40 billion US dollars, net income of close to $1 billion as of 2024. The bank has an investment grade rating with a BBB flat rating from Moody's, BBB minus from Fitch. I was having a conversation yesterday and I was asked how the bank is able to provide competitive funding, which differs from some of the double-digit interest rates that sometimes pertains across the African continent. And the explanation I gave was that the reason the bank is able to do that is because it has a core shareholder base, is very well capitalized from an equity perspective, and it's also able to leverage its investment grade rating to mobilize capital from the capital markets, which it then on-lends to qualifying projects at attractive interest rates. So the bank's mandate, which is facilitating intra and extra Africa trade, is focused on three key things. Firstly, facilitating that through supporting the objectives of the African Continental Free Trade Area, which I'm sure most of you are familiar with. Secondly, through the financing of projects that facilitate industrialization and export development across the African continent. And thirdly, through the provision of advisory, capital markets, and specialized services, as well as things that drive continuous innovation and digitalization across the African continent. Focusing specifically on the mining industry, which is critical to the economic success of the African continent. A lot has been said over the last couple of days about the potential of the industry, the opportunities it presents to our various economies, and so on. For Afreximbank, the key question is, what can we do to move the industry forward? How can we move the industry away from the pit-to-port model and reduce the vulnerability to commodity prices? How can we ensure that we are building a skilled workforce to enhance productivity and long-term economic resilience? Projects within the mining industry that have a value addition component are therefore very attractive to us from the perspective of a financier. The bank has a suite of products which it deploys to qualifying mining projects across the continent. Permit me to touch on a few. A few of such products include the provision of long-term senior debt financing, which can be applied towards either greenfield or brownfield mining projects, either to help those projects to get to production stage or to help with expansion or refurbishment of, mining equipment. We, in addition to providing such funding, we also provide project preparatory facilities, which we think are quite key. In the panel that just concluded, there was a discussion around the importance of project preparation in terms of making sure that projects get to a bankable stage to attract different types of financing and to ensure that those projects do not fail midway. A few years ago, the bank designed this project preparatory facility, which enables us to provide up to $3 million to project sponsors to be applied towards pre-feasibility studies, feasibility studies, design work, etc., to ensure that the projects reach bankability stage with an understanding that once the projects are certified as bankable, either Afreximbank will provide the long-term financing required to move the project on, or other financial institutions will be attracted by the bankable nature of the project to provide the required capital for the development of the project. One other thing that we do, which I think is quite important for the industry, is by virtue of the shareholder base of the bank benefits from preferred creditor status. That enables us to operate in jurisdictions or geographies that other investors might perceive to be too risky. We leverage that preferred creditor status to provide guarantees to other financial institutions to de-risk mining projects on their behalf. We also provide political risk insurance to equity investors in mining projects to deal with things like expropriation, basically crowding in capital into Africa's mining industry. Afreximbank also provides financial advisory services to project sponsors, again aimed at improving the bankability of projects and the debt capital mobilization prospects of those projects. The bank has a very successful syndications desk. As an institution, we're able to deploy up to $1 billion to qualifying projects. But I'm sure you'd agree that sometimes it's important to diversify funding sources. And so there are certain instances where a project will require multiple financial institutions to come together to deliver that project successfully. We have a very successful syndications desk, which over the last few years has ranked quite highly on the syndication league tables across the African continent. The benefit of this to project sponsors is that in addition to capital that Afreximbank can provide to these projects, we can work with our syndication desk to bring in other financial institutions to complement whatever funding that the bank is providing. There are a number of mining projects that the bank has been involved in over the last few years, and I just want to show a few examples. One of the ones we are very proud about is the Bawmahan Gold Project in Sierra Leone, which is a greenfield mining project being developed by a company called FG Gold. The total funding requirement for the project was $330 million. Afreximbank, together with other financial institutions, provided the senior debt financing that is now being deployed to get the mine into an operational stage. Another good example is the Lucara Diamond Project. Lucara is a diamond project in Botswana. That project is already operational, but there was a need to invest some additional capital to expand certain elements of the project and also to replace certain infrastructure. Here also, Afreximbank provided a $44 million facility alongside other financial institutions to be applied towards that objective. The last one I'll talk about is Dynamic Mining, which is in Guinea. where Afreximbank provided an $80 million senior debt facility to be applied towards the development of the mine. It's a bauxite mine, and in addition to the funding that we provided for the development of the mine, we also provided funding for ancillary infrastructure to ensure that the mine products could be exported out of the country. So, as I mentioned in the beginning, it's our first time attending ADU. We are basically here to build relationships with institutions that are interested in investing in the mining sector across the African continent. We believe that we have a lot of value to add, and we will be interested in having discussions with respect to how we can be of service to project sponsors and other key stakeholders. The team will be here until the end of the conference, and we welcome the opportunity to engage with you. Thank you very much.